Greetings, this is Llewellyn. This is my first video, and I just kind of wanted to introduce to you what I think is an awesome day trading strategy I've been developing, and I'm calling it my over RSI strategy. That's because it's particularly keys on trading opportunities when the RSI moves into the overbought and oversold regions to key off of, and use those for indicators for when to enter and exit trades. For this video, I just kind of wanted to lay out the rules and guidelines of the system as I've been developing it, show you some examples of it working. No mumbo jumbo here, just kind of wanted to get straight to the point. I started outlining a series of tutorials that I can build on top of this. Let's see. Yeah, so these are just some ideas for some different topics, but this is kind of the bare bones system I'm going to show you today, which you can use and it'll work just fine. But obviously, when you can combine some more advanced systems and strategies along with it, without making it too complicated, you can make it even better and more powerful. So, but today is just kind of for getting into the basics. So what I'm not trying to do is reinvent the wheel and teach TA basics. I'm kind of coming to this assuming that you have a general understanding of that. If you don't, there are a ton of other great traders providing awesome free content like Philicon and Haitian. That ground is kind of thoroughly plowed, at least seems to be right now. Don't really have anything new to add to a lot of that. So I'm kind of focusing on the specifics of this system and making profitable trades, winning consistently over time, doing the right things. And so I'm going to focus on the tools, the indicators, and how they kind of relate to that. So basically, I just wanted to come right out and just give you the goods right here in the first video. I think it'll really help, especially new traders, become profitable way faster than it took me, which I'm sure there are a lot of traders out there that know kind of the growing pains of being a young trader. I think everybody goes through it. Hopefully my kind of goal, my mission is to take what I know, kind of pay it forward, hopefully shorten the learning curve, or at least give you a tool to add to your tool belt when opportunities arise. You can give it a try and see if you like it. In return, if you find it useful, I'm hoping you'll like and follow me on Twitter and YouTube, and share my content. Recently, I kind of just decided, hell, I'm online trading all day, every day. Anyway, it's what I do for a living, so I might as well kind of build up more of a social media following and just kind of contribute more to the conversation. Which really, it helps me stay focused on my goal, to develop as a trader, just make a shit ton of money if I can. So that's kind of what I'm after, and if I can help some other people, and also maybe you have some ideas to improve this system. I have no ego when it comes to anything. My only goal is results and making money, and that's the fun in it. That's figuring the game out. If there's ways to make it better, I'm all about that. So cool. So, and just real quick before I get into it, speaking of money, I really like Philicon's approach, which is, hey, you don't have to donate. I'm not charging for the content. You don't have to donate, but if it helps you and you start killing it, hey, I definitely appreciate a thanks in the form of a small donation, which I'll use to treat myself to a tasty beverage and cheers you graciously in the process. I'm not going to turn that down. I think it's a cool gesture. I like how he does it, where, if you start killing it, using some of those, using his systems and likewise with mine, hey, buy me a beer. I'm always cool with that. I just want to be clear. My main focus is to provide some useful information. Take what I know and have experienced, pay it forward to new traders, and hopefully there'll be some use there. I've definitely benefited from content like this, and I think it's what makes crypto a cool community. There's there's a lot of good conversations going on. And yeah, and if there's a if there's a demand and if people dig what I'm saying here, I'll definitely keep it coming. It does take a little bit of time to create some of this stuff, and time that could be used for TA and other things. So definitely helps to ensure that the content keeps coming if you like it, to make it worth it. So cool. So let's get after it. So I'm going to show you the fundamental bare bones of this system, and follow up with a more nuanced content if there's an appetite for it. Cool. So what is over under RSI? Basically, so it's just a system of rules and guidelines for entering and exiting a trade that I've developed and I've been testing and have found to be really effective. It's simple and straight to the point. When can it be used? It works on all time frames. That's one of the things I love about it. I use it mostly for day trading, so I use it in like the 3-minute chart when we're looking at right now, which seems really short, but I found that the signals are actually pretty reliable, especially for larger cap coins like Bitcoin and Litecoin. So yeah, that's one of the benefits of it. But you can take it, and this is something I may make a video on, but the differences in using the system, whether you're doing day trading or more of like a swing trading. That's actually kind of how it came about. I was trying to develop a system that I could easily teach to my dad, who's been getting into crypto, that he may be able to just set some triggers, set some reminders in TradingView, and when the criteria is met, then you can start to execute the trade with high confidence that it's going to work out. So why use it? The reason why I use it is because it opens more opportunities to trade. I found it to be more reliable than trying to trade patterns, things like that. If you've been in crypto for any period of time, there's a lot of manipulation and deception and things like that. And I think RSI especially is an indicator that is incredibly useful, and it tends to really show it's a good leading indicator in the sense that it's reliable in predicting what will come next. It'll help you, even if you have other ways that you like to trade, or certain pattern setups you like to use, it'll help you confirm whether it's a trade. It's just another level of confirmation you can use to enter the trade, or even pinpoint your entrance and exit of the trade. If you follow the rules correctly, it has a really high hit rate, and it prevents the kind of damaging losses that especially newer traders tend to incur, where you can have some really good trades and then you might have one that just kind of wipes it out. So I kind of built this system with the idea that practically a robot could run it. It's not entirely true. I kind of think about it as like flying a plane where, you can have autopilot, you can kind of operate based on the triggers, but there is some pilot expertise that really comes in handy. And, there are times when you'll want to take the controls and listen to your gut and listen to, other things that are going on. So really, it's all about steady, consistent wins day in and day out. That's how you succeed, especially as a day trader. This isn't a system to swing for the fences. This is, if you want to do that, I think the way to go is more, accumulating altcoins and things like that over time when price dips, and just kind of holding for the pump. This is more for like traders that are looking to consistently execute trades day in and day out. That have high probability of success. So that's kind of what I'm trying to do. Not, like I said, not swinging for the fences, but trying to achieve 1, 2, 3, 4% trades, even 0.5% sometimes. If you can do that consistently and limit your losses, your portfolio will grow in a hurry. So that's kind of what I'm after. So the keys are consistent wins over time, minimize losses to protect capital, control for a high volatility of crypto markets. So obviously we know how these markets can be. I don't like to expose my capital longer than I need to. I like to get in and get out of trades if I can. And these rules will help you normalize for that volatility and you know, protect your capital. Essentially, that's one of the main goals. So, and then those three things together equals, you know, compounding profits over time. And really, once even just if you're taking small wins consistently, once you start building your portfolio and you reach critical mass with it, and it's big enough that you know, these small gains can really start to return some huge profits. So a 1% gain, you know, on a $30,000 account using margin, you know, you can see hundreds of dollars returned, thousands of dollars sometimes. So that's kind of the name of the game. So I just kind of scrolled back. Let me get into it here. I'll show you some examples. So I scrolled back a few days on the Bitcoin chart to just find an area of some volatility, but really you can go up and down the chart and this will work almost everywhere, you know, and obviously it works a little better if you have some volatility for, you know, you need that for trading, but you know, I'm kind of just essentially picking a random place on the chart and we can kind of go through how this would work. So let's see, I have a list of rules that I made. All right, cool. Yeah. So here's how it goes. Rule number 1 is only enter a trade when RSI spikes and closes in an overbought or oversold zone. So for RSI, our overbought zone is above 70, our oversold zone is below 30. So you can see with RSI, it's spiking into these territories. So essentially when it does that, that signals to us that we can start to enter a trade. And so I also included here a list of guidelines, trading guidelines. So from experience, just ways to enhance these rules a little bit. For example, you know, you can enter a buy in any time it spikes into this zone, but if you get a stronger sell-off like this we see here, I generally wait for the second. There's almost always a second spike in the RSI, and I usually wait for that one. It's usually a lot closer to the bottom, and as you can see, or the top if you're going to short, as you can see right here, we have a spike, then we have another small one, which you know, I might start to enter a small amount in my position right around this point, and then leave plenty of room to average down, so that as this next spike is created, I could come in with another order here and, you know, average down somewhere around, you know, in this region. So I'm gonna mark this here. So we see this would be our indication to enter a long position. So I'll pop that right there. This kind of shows, okay, so that's where we entered the position. So the next thing we're looking for is for RSI to, we're watching RSI, and the next thing I want to see is, I want to see it make another dip or another spike, but not in the overbought or oversold region. So between 30 and 70. This one, we almost have it come down into the oversold region, but it doesn't quite. One thing to keep in mind too is I like to wait until the RSI candle, until the candle closes, the period ends and it closes, and then I'll make the buy right at that point, because RSI, unlike price, you'll get the candle wicks and things like that. RSI can move, and it ends where it ends. So this, you know, if there's price action, it can go into the oversold region and then come out. So I wait for it to close in that region. I recommend that. Cool. So let's see. All right, so we open a long position here. So the next thing we're looking for is for price to make a, or for RSI to create a trend, essentially. So there's kind of the ultra conservative way that you can play this, and then you can be a little more loose with it and still be within the rules. So the ultra conservative way to do it by the book is when RSI creates a new spike in between 30 and 70, then we draw a trend line right there from the last point that's in the overextended region. Okay, so this creates, we can see that creates an RSI trend line. And so our trigger then, basically now we're in the trade, we have the trade open and we're watching it. And our signal for exiting the trade is when RSI breaks this trend line and breaks back across it. So I'm calling this line the close line or the sell line, where that's your key. If it crosses back over according to the rules, you close the trade. That's the safest play to make. So even if you did that, you would get something like, you know, a little less than 1%, 0.9, something like that. Still that's a decent trade if you're playing with a big enough bank. That could be hundreds of bucks, especially on a large cap coin like Bitcoin. On some of the altcoins, you'll get bigger percentage moves than you'll get with Bitcoin. So if you're playing EOS or IOTA or even Litecoin, this might be 3 or 4% a move like this. But I tend to try to play the larger cap coins just because I don't like funny business when I'm playing. These ones are more stable and you're less likely to see craziness, which sometimes can be fun, but not for a simple strategy. So that's the first way. That's kind of the by the book way we could draw this line. The other way I do it, and I guess this is by the book too, is I'll wait until RSI and price together create a new movement. So here we see these little spikes in RSI, but we're still kind of in the same trend. And then here at this point, when it comes down, this is when we're actually creating a new, there's price action that's creating a new trend, and then there's also RSI making a new trend. So you could take this line and draw it like this. I'll give you a little more runway. So in that case, so then we would close the trade like around probably this candle here. Okay. So you don't really get that much more there. If you wanted to, if you feel strongly in the trend, you can try to ride it out a little longer. The other signal that I'll use is if I want to play it more conservative, I'll use this close line or sell line, and that'll get you the 1% there. But the other thing I'll do is or the other signal to close the trade is when RSI moves into the overbought or the opposite overextended region. So we bought when it was oversold, and if it moves into overbought, we could potentially do something like that where it moves up into, finally it closes. Actually, that doesn't even quite close in overbought. So this is a case where you could ride this one if you were feeling really confident in it. It never makes it into the over bought region, so you could actually draw the trend line like this, because this is kind of the next major RSI trend adjustment, and in that case you could you could ride it all the way until you're finally in overbought territory, something like that. So, you know, the idea isn't to pinpoint the top, it's to get into a successful trade and get out with profit. So that's an example there of how that could work. And then the beauty of it is you can turn right around, and once it moves into overbought, now you can look to open a short position. So right here, this is our second spike that closes in RSI. And obviously the higher the better. The ones that just kind of dip in there, I'm always more skeptical of those. But this one made it all the way up to almost 84 on RSI. So this would be a candidate here for, I would open a short position here. And then again, kind of two ways to do this. So you can, this would be, you draw your sell line, and then, you know, let's see, does it close? It closes really close to oversold here. So I would consider closing the trade right at that point. Depending on how much you come into the trade with, if you have plenty of, if you're leaving yourself plenty of runway, then you can, you know, let it run for a little bit longer and just average, dollar cost average. Here we go. So that's like another 0.75%. So enter a trade when RSI spikes and closes in the overbought and oversold zone. And then, so let's talk about adding to your position. So you, the rule for adding to your position is RSI creates a new distinct spike and close in the overbought and oversold zones again. So essentially you're not adding to your position unless if it's between 70 and 30, you're only doing it in the overbought or oversold zones. And if especially if price is diverging from the indicators. So like right here is a small example of that. For a long position, you know, we see that getting a little bit of divergence, a little bit of bullish divergence there. So that would be, you know, another decent symbol to, or signal to open the trade. I always do that. On the second spike, so we'd open a long position there. And then, you know, this is a case where it doesn't really create a strong trend line with RSI. So if I come in with a fairly small position, I might even just, I'd probably add to it at this point because we're spiking in there as well right here. So this could be another, you could add to your position here. Potentially. There's also another rule I included, which is don't add to your position unless you are negative relative to your base price. So in other words, don't add to it if it's going to, if you're long, don't place an order that causes your price basis to go up. Does that make sense? So I don't want to. I want to, if I'm putting in new capital, I want to be averaging down. If price happens to take off and I only have 15 or 20% of my position in, okay, fine. You know, I'm happy with that. I'm not going to try to buy into a rally. I'm going to buy when there's divergence and when price is in the overbought or oversold region. So again, so now if let's say we kept this trade open. I mean, technically, if you wanted to do this really conservatively, you could do it like this, and you could close the trade up here. And if you want to just get in and get out, what's wrong with this thing? You could do, why isn't this working? What's going on? So even this would be like, yeah, it'd be decent. Let me draw that trend line again. Somehow I managed to screw this up. So yeah, if you came in right here, you do something like that, and then you'd close about right there. And that would be, you know, another percent almost. But you could also add your position here, and then, so you wouldn't draw the trend line like this. At least usually I wouldn't. I might do it for reference, and in this case that would have worked out okay. But if it's a really flat trend line like that, typically I'll go to where the last spike is, and then I will look from that point on to the next place where there's some price action. So, you know, again here, sorry, my dog's freaking out. I had to pause it real quick. Hopefully it stops. All right, cool. So I think I was right here. So yeah, so I can't remember exactly what I was saying, but you could enter a position here. You could play it, you know, the ultra conservative way, or I think I remember what I was saying. So a lot of times, waiting until you see some price action movement that coincides with the RSI, then you can get a little more run out of it. But so you could draw your trend line like this, or you could close it when it gets up into, we actually do cross into the overbought region here. So it's a nice safe play, and we could close the trade out, you know, here, or if we wanted to wait for some price action, if we felt confident in the movement, we could draw this new trend and then either wait until it comes and crosses that line, that's like the stop loss right there, or when it gets up into overbought region, you could sell it right there too. So a little percent, that could be 1.5%. I tend to try to take profits early rather than late, because I can just reset and get into a new position. When profits are there, I like to take them, and you know, a bird in hand's worth two in the bush kind of thing. And you know, while the swing traders and everybody's waiting for their big, you know, 20% moves and stuff like that, you can just be making 1% up and down as you go. Okay, so right here we have a opportunity to short. So I could literally just go down the entire chart and just do this the whole way. That's what I like about this system. It is consistent and it works. So here we could do this, comes down to there, and we could close the trade about right there. So that might be, you know, 0.5%. Maybe if you really average it well, you know, 0.7%. But you know, and then sometimes you're going to run into these bigger moves. This is why playing over time, this is why this is a winning strategy over time. So sometimes you're you know, you might get a false signal or something like that. Like here's an example of you know, maybe this is a losing trade, but you're going to run into more good trades than bad trades. The ones that you do run into that that don't work as well. So let's say we buy the second spike, right around here. Then we can average into it. Actually, so this would be a short. I'm just using green as like we're opening the trade, there. So the ultra conservative line would be like that. If you wanted to try to play this one out a little longer, you could, draw a trend line like that. And so you might end up closing the trade according to the rules, somewhere like right here. So essentially you would have got stopped out because the rules say you have to close the trade there. So, okay, you get stopped out and you take, split the difference here. I mean, maybe you take up 0.25, 0.3% loss, but the RSI trend will cross back over the sell line usually before you start taking a bad loss. So that's what I like about it. You're going to run into cases like here where you can get a few percent just by playing conservatively. You could go long here and draw your trend line like that. We move into overbought territory there. So that's where we would sell if we're playing it straight up. And you're going to get a little over of a percent versus the smaller loss that you take on the ones that don't work out as well. And then you'll still run into some of these bigger ones, like up here. So you'll still, you could still get a nice little 3% gain there. Maybe this short doesn't work out. You try to short here and well, maybe it would. I mean, this is kind of the beauty of it. If you are patient enough to wait for the spike to happen, wait for the candle to close, even here in an uptrend, man, it's awesome. It's like, if you can average into this right, maybe it doesn't work out the best, but maybe it does. Maybe you get a percent out of it. Maybe you get 0.7% out of it. It's not bad. So over time, as a day trader, you're trying to win consistently. You're trying to avoid the big loss, and that's what this system does. It's to a T. It's basically perfect for playing like that. Let me just add that because I'm OCD and I want to make sure I put it there. Okay. So, I mean, look at all these trade opportunities. This is over the course of a couple days. Couple days on one chart. There's other charts that you can play. Yeah, they kind of move in unison a lot of times, but if you're playing EOS, recently it's been on fire, so maybe there's some more opportunities there in addition to what Bitcoin, these other ones are showing you. So this is stuff I'll get into in more detail in the later videos, but as part of the rules, so we just went over, you don't add to your position unless you are negative relative to the base price. So you always want to be averaging down if you're long or averaging up if you're short. And then, so make buy number one the smallest. So each subsequent buy should increase in size. So when I enter the position, so generally with this strategy, we're buying against the trend to start, and we're looking for a bounce. So I think it's best to be conservative as you're trading like this. And so the first spike, Again, I'll get into it in more detail in later videos, but you know, for this short, maybe you only come in 10 or 15%, and then let's say you even, you know, you wanted to play this more as a swing trade or something, and you want to add each time it comes into this zone. You know, you're still leaving yourself enough room to absorb a you know, a percentage move of 5% or so, and you could average up in your short all the way up to the top. Leaving yourself enough room to do that is really important. I think it's just good trading practice anyway, but I built it into my system to take some of the thinking out of that. One of the worst things you could do as a trader is come in too hard right away and get yourself into a bad position, and then you're stuck. You're better off coming in conservatively and adding and averaging and making your orders bigger as you go, so that you're scaling into the trade. And then finally, when it does move back in the other direction, then you have a profitable price that you can use. So I already went over this, draw RSI trend line to manage the trade, but I'll post this stuff so you guys have this as a reference. And I also discussed this too. The close line is kind of the stop loss line for the trade, and then also if it moves into the overbought oversold zone. And like, here's a great example here. I'm just picking these out randomly. You know, here's one where spike, spike. So there's our second spike. Open the short, and then the bottom just falls out. And it goes all the way down into the oversold zone. So rather than wait for it to, you know, hopefully go down, which if we were shorting, it didn't. It started to trend back up. So you can just get in and get out of this trade. Open up here, you know, close. Where do we hit it? Looks like we hit it about like right there. So that's 2.5%. That's a 2.5% short, and that would have taken 12 minutes. In and out, your capital is safe, and you're on to the next trade. Who gives a shit about if it moons or if it doesn't? You want to win over time. You want to win the short game, or play small ball, I guess is what they say. And you know, Bitcoin, I think this recent consolidation, it pulled back, you know, 80% or something like that. So if you're hodling that whole time, I mean, I use, you know, multiple strategies. I have longer term holds that I just don't touch, and then I have what I do with trading. But as far as trading is concerned, I like to be in and out of positions and not expose my capital. I don't like to go to bed with trades open. I don't like to wake up to some Korean sell off or something like that. Or a Korean FUD or whatever. You know, I like to start each day fresh and just try to win every trade. And winning every trade doesn't mean that every trade is profitable. It means making smart decisions in every trade, because over time you're going to make a lot of money if you consistently do that. All right, cool. So those are the basic rules. Like I said, you can build on this, but that's the basic system, and it's simple, but it works, and it's a way to look at trading differently than, hey, that's a bull flag, that's a bullish pennant, that's a continuation pattern, it should go up. Yeah, sometimes it doesn't though. Sometimes price will fake out like it's going up, and then it'll just go down. The charts are very volatile and unpredictable, and this system takes a lot of the guesswork out of it. Again, not every trade is going to be glorious, but you're not going to have those the kind of losses that set your portfolio back and you consistently win over time. That's the name of the game. So for guidelines, just real quick, again, the second RSI spike is usually the one that I look for. That's just kind of my rule of thumb. When I see the first spike into RSI, that usually is kind of a signal to get ready that a trade can be coming up, especially if I start to see divergence in the RSI. So that's what I'll do, and I'll just execute. I'll wait for the candle to close and just execute a market order just to get into the trade. I know it's a little bit of a higher fee to have the maker fee versus the or to just get the taker fee versus the maker fee. So generally, I will market execute the orders entering the trade, and then I might try to do limit orders to exit the trade if I can, measure out the target correctly enough. But so that's kind of how that works. MACD. I use MACD to help verify and confirm the signals with the RSI. I think RSI is more reliable, but using both together can be really helpful, especially when you can pick up divergence in the oscillators versus the price. If MACD and RSI are both diverging against price, I take that as a very strong signal, and I'll usually act on that. I also will use Stoke. I'll get into that in a later video, but I use Stoke as well. But this is kind of my bare bones kit for doing this. So in general, err on the side of the trend. If recently we had this strong uptrend, right? So shorting is going to be tougher in a strong uptrend. But I mean, you could still do it. There are still pullbacks. But if we are in a strong uptrend, you're probably going to get more run. You're going to get a better percentage if you try to go long in an uptrend. If you try to short in the downtrend, I'll play it both ways. And lately, the last couple days, we've just been sitting here, kind of not really moving sharp in one direction or another. So you can just kind of play these little dips up and down. But if it starts to impulse one way or the other, I tend to try to err on the side of the trend if at all possible. And when it does that, when the trend, if it's in a strong uptrend and it moves into the oversold region, you may only get the one spike in that zone. So it's good to be aware of the trend and how it's working at a greater degree than just like on a 3-minute chart. So basically, you may not get the double spike into that zone in a strong uptrend. And likewise, if you're trying to short, RSI can stay up in the overbought region, while price moves up before retracing. So it's something to be aware of, to be cognizant of. Obviously, the trend, the direction of the trend, and if you can sync up with the trend, that's always going to be in your best interest, no matter what your strategy is. So in strong trends that are moving against your position, I recommend preserve your capital. Wait until, if we're having a strong bullish trend and you're looking for a short, and you see the signals kind of start to show, but it's still not reversing, preserve your capital, particularly, when it becomes very overbought or very oversold, or there's divergence building. Err on the side of caution, because with oscillators like RSI, like I said, it can hang out in these zones longer than you expect. So it's just something to be aware of. But, look for the distinct spikes and the change in direction for entering a position. And likewise, if price is moving with your position, if you're long and it's moving up and it starts moving up aggressively, give it a little more breathing room. You don't need to cut cut loose as quickly. You can wait for a more clear RSI trend. You know, sometimes I'll even zoom out and look on a higher degree of, you know, here's 15 minutes. We have this trend line that's building right here. So, you know, if you opened a long position here, you could still be in this long position. Maybe it bounces off of this RSI support and continues up a little more. Whereas, you know, if you were just doing this on the 3-minute, you probably would have already closed it by now, but you also could have re-entered it a few times as well. So this gets into more of the nuances, but it's just something to keep in mind. And I think I already mentioned this, but it works in all coins. Some are a little bit more reliable than others. Obviously, the ones that are more manipulated and more centralized are going to disregard the signals a lot more than ones like Bitcoin, where when it's giving clear indications, it'll tend to follow that. So then, also included a few psychological guidelines for running the system. And number one is be patient, let the trade come to you. Don't ever enter a trade that you're not ready and you haven't you know, analyzed it and you're comfortable with the setup. Wait for the criteria of the system to be met. Wait for RSI to close in the overextended regions. Wait for the trend line to develop. If it crosses the close line or the sell line, close the trade. Takes a lot of the thinking out of it, but it also takes a lot of the guesswork and the volatility out of it. Never hold and pray. If you're uncomfortable, or if the trade is going off script, just exit the trade and reassess where you're at. Again, and number three, defending capital is the number one priority. So all these things kind of go into the same idea, which is especially with day trading, like don't get tied up, don't get attached to any one position. Every position is a new opportunity, and don't let one trade sink a handful of really good trades, or one bad trade sink a handful of really good trades. You're better off if you're using these indicators. You're generally not gonna end up buying at the top. If you use this system when RSI is oversold, you're not going to buy at the top. If it's or you know what I'm saying, if it's oversold or overbought, it's because there's the chart should react and move back in the other direction. So it's better definitely better to live to fight another day. There will always be new opportunities, and as you get comfortable with the system, you'll start to trust it more. That's what's happening to me as I'm still developing some of the rules. Like I trust it now. I've seen it play out in my trades. It works, and you'll get adjusted to it, and you know, learn what setups to, you know, that could be less promising versus ones that'll probably end up working out better. And for me, I celebrate good decisions more so than profitable trades. Sometimes no trade is the right trade. Sometimes closing a losing trade is the right decision. So don't just celebrate your profitable trades. Celebrate good decisions, because good decisions over time is going to make you profitable. And over the course of years, if you make a lot of good decisions, you will be friggin' rich. And then, yeah, I already said, don't let one bad trade erase several good ones. Goes without saying, but it's really hard as a trader, especially in crypto. FOMO is really powerful. It can mess you up bad. And, you know, sticking to a system like this, or your own system, building some rules will help you at least have that second thought when you go into the trade. You know, hey, it's really overbought. Going long here probably isn't a good idea. Even just that simple kind of examination. RSI is really overbought. I don't think I'm going to buy into this. You know, that's the kind of line of reasoning that this will help you with. So I kind of rambled on a little longer than I expected. I apologize. Maybe I'll try to make a shorter video or a shorter version of this. But like I said, let me know what you think. I'd be interested to hear some feedback. I'll get into creating some more content, getting more nuanced about exactly how to use this, and introducing some concepts like Elliott wave. I find to be really helpful in orienting myself to where the chart is and what to expect. So I'm not surprised when I see different kinds of price action. Obviously, some things like Fibonacci can really help when you're targeting positions where you think you can open a position or where to sell. So using those things in conjunction can really make it even more powerful. But as a bare bones, kind of like those are the rules. This works. Give it a try. Let me know what you think. And happy trading. I hope it goes well for you. And like I said, please give me a share, give me a follow if you don't mind. I'm going to try to provide some more content for you guys. And as a group, as a community, hopefully we can all make each other better traders, and have some success in this crazy ride that is Bitcoin. Thank you. I'll talk to you later.